heading out to catch up with Tom Ravlic via Zoom. The man is from Tom Ravlic Consulting. Tommy, welcome to The Informer.
It's good to be back again, George.
Last time you and I spoke, we got a chance to review your book, and it's been very well received. But there's some more information that we need to discuss. There are so many people out there in this day and age who need some help, need some assistance when they're going out there, and they need the assistance of, say, a financial planner. And we know that through the Banking Royal Commission, there was so much we discovered that needed to be trimmed, that needed to be secured. What has come out of that? And more importantly, going forward, what's the best advice that you can give to people out there who do need the services of professionals who do know what they're talking about?
Okay, George, I think the most important thing first for people watching this is to just clarify the core issues from the Royal Commission. Over several decades, the banks and other institutions had built up a culture that was built around profit generation. And as a result, there were people who were being left behind, whether they were being exploited because they were vulnerable and were sort of easy, catches, if you like. They were the sort of low-hanging fruit when it came to increasing credit or selling insurance in a situation where insurance wasn't perhaps needed, like the famous self-managed super fund case I wrote about in both of my books, Bulger City and Rorts and Ripoffs, where insurance was sold for an SMSF where there was nothing in the box, if you like.
Yep.
But they were sold an insurance product. The only reason you would sell an insurance product in that situation is not because the client gets a benefit, but it's because there's a trailing commission or some other kickback that goes to the person who sold the product. And that's the situation we saw in the Hayne Royal Commission. There were a raft of other examples as well, where there were either commissions or success fees, or people were simply being measured on sales. It was incentive-based payment within banks, but also there was a threat of termination of employment. So once you got into that ball game, you found that people were compromised. They were deeply concerned about what they had to do to make a quid, but also deeply concerned about what the ethical consequences were. Now, if I can step back into the other portion of your question, which is what do people do when it's time to seek an advisor? So what do you do when you've got a clean slate, you need advice, or you're not feeling comfortable with what you're getting right now? First thing is you've got to decide what you want. Let's take the example of tax. Okay, the law requires a tax advisor to be registered. Okay, I can't give advice on tax matters, even though I'm a member of a professional accounting body, because number one, I don't have a practicing certificate. Number two, I'm not a registered tax agent. In a journalistic capacity, I can write about it generally. I can talk about tax policy and elements of the tax law people need to be aware of when they're thinking about their tax, but I cannot provide advice as a member of a professional organisation on tax issues. So first and foremost, people need to be sure that the person they're getting advice from is a member of a professional body of some description. It guarantees a minimum level of competence. Okay. Secondly, the person they see must have what they call a certificate of professional practice or practicing certificate. That is a recognition from a professional organisation that the person has gone through additional training and additional ethical training, if you like, and also holds professional indemnity insurance. The latter is really important. If something goes wrong, the practitioner may be able to get some money from the professional indemnity insurance just to pay back or compensate the client.
If I can pause you there, there's been a very notable storyline that's made the news of late and featured, in fact, on 60 Minutes, where a financial advisor has managed to swindle more than $21 million from her closest and dearest, incredibly, then disappeared. All those people, many of them, have reached into their superannuation thinking they were getting the best possible advice. And here they are now stung in the most brutal fashion possible. And many of them will have nothing to look back on. And that's it. That's something that should never happen. So unless they have that indemnity insurance, you shouldn't be going anywhere near them, should you?
Well, no, you shouldn't go anywhere near them in the first instance because simply you got trouble.
Yeah.
You got trouble. Now, if you said, but that's not the only issue. We've covered only